How's it going, everyone? RoyalFlush here. Welcome to Meter Management, not financial advice. As usual, any of the information from this video is not advice to buy, hold, or sell any stocks or crypto. Take some good notes. Let's have some fun. Alright, so today's topic is the use of lines on the charts. Now, when you look at a stock chart, I mean, okay, I'll say this many times in many of these videos. A lot of people only see up and down. And when they see a stock going up, alright, let me go get some of that. And when it's going down, it's like, oh no, what do I do? That's generally how it is when you start with stocks. And I think it's also somewhat intimidating when you see a chart and then you want to play it, but you don't know where to start. When you're in the world of stocks, people see numbers, people see lines, people see profits, people see losses. And you might wonder, how am I supposed to play this game of stocks? How am I supposed to profit off of all these just based off looking at lines, numbers? It's really not as complicated as it looks, but if you don't understand what everything that is shown to you means, then of course you won't understand how to play it. But if you just break things down step by step and understand what each line does, you'll get a better feel of how the stock moves and how lines can be used to help you out. But of course, in my normal fashion of showing how things work, I'm gonna show you some bowling in Tekken Bowl. So, Tekken Bowl. I used to play this well, I played Tag 2's version of Tekken Bowl. As you can see, there's very many characters in this game. You can see the upper corner there. They have different power levels and spin ratings. But back when I used to play, I always actually used to use Jin and Kazuya in Tag 1's version of the game of bowling. But Jin's always been my favorite character, so I'm going to go Jin here, as you can see by the number of times I use him. So I used to go bowling a lot with my dad, my sister when I was younger. Still a fun activity, even in today's day and age. It's a good icebreaker. You know, get to know your friends better, know your family. It's a good activity for everyone. So you can see here, you can see the arrows. There's many areas of this shown on the screen here where you're being aimed. You can see me moving left and right with Jin, and where you want the ball to be aimed at. And typically with bowling, you want to aim for the center pin, but slightly to the right, depending on what your grip style is. So Jin is right-handed, so I want to aim for right here, down the middle, but you see how I'm going for the center and to the pin to the right of it, and I'm gonna try to match it with his power and also balance. Also, you can see right here, you could move left and right, see, depending on how you aim. And then there on the left is a power meter. So since he's right-handed, it doesn't go too far to the right, and you can throw it maybe more to the left. But with this, I want to try to get down towards the middle, because I'm already aiming towards where I want to be aiming. So let's go and try to get the middle here. I'm going to move him slightly to the right as I throw the ball with power. Ooh, close. And then so for the second one, I'm going to try to get a spare. Look at those pins roll. Okay, so same deal, but now this time I'm going to try to aim, maybe to compensate for his throwing hand. Still aim towards it, maybe look at it a little bit better, and now I'm going to try to get the power down the middle. And this is the real power. Get it. Got it. Nice, a spare. But yeah, with bowling, of course, you know, you want to try to get a strike. You want to try to get the strike, but of course, your goal really is just to hit some pins. No need to overcomplicate it, but you know, you got to know your strengths. You got to know where to throw. You can use the lines. You know, to understand where you want to, you know, make the most points. So let's see if we can get a strike. Okay, I'm gonna have to move Jin slightly to the left. I'm gonna try to get some power though. There we go. It's a little bit tougher than what I remember. Picket fence, huh? Okay. So we can get all 4 pins if we get this just right. So I'm gonna try to favor his left or his right-handedness. So I'm gonna actually aim this to the left a little. Get some power. Actually, you know what? Let's just go for the left. Alright, now I can walk to the right. Watch this. Ooh, 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 ooh. Oh, got all 4. Okay, good feeling. Nice. There we go. Nice. So, with enough practice and enough aiming and knowing where your strong suits are, you can get a strike. So let's consider many areas of life where you might not realize it, but you're using lines to, you know, get around, to understand where things are headed, where you gotta go. So, you know, consider when you're driving, you know, you need to get from point A to point B, and you got all these lanes telling you where to go. Without lanes, you won't have any idea of where you're supposed to go, what's the opposite side of traffic, where to stop, where to go. Think about where you're headed. Are you headed in the right way? Are you headed towards the entrance, towards the exit? You want to make sure you're going to the right place, whether you're trying to head on out or you're trying to go on in for awesome action. Even consider warning signs. These signs may actually save your life, or may even prevent something really bad from happening, or, you know, tells you maybe you should look out. Think about what you're doing. Even in real life, just regular life, regular living, there exist signs that tell you this is where things are headed and maybe you should act a certain way. And of course, in stocks, you can't just look at the direction of things and be like, alright, I'm gonna get in because things are going up. What do you do when things are going down? Or if things aren't really moving the way you want it? You got to be able to react and respond a certain way. So let's go ahead and look at some charts, see what's going on, and show you a few examples of how to use lines and charts. Alright, so I have here my triple Qs. Triple Qs is a ETF that is similar to the SPY. It contains 10 stocks and is a basket of some strong stocks within it. Here we can even look at the top holdings, some of them maybe. You know, you got your Apples, Microsofts, Googles. I like triple Qs because it actually has Costco in there. Tesla, Nvidia, several others. They have several tickers in common. But what you mainly need to know is that it's a good indication of the S&P 500 based on how well some other stocks are doing. So I have here charted out my Fibonacci retracement on there. I've already made a video on Fibonacci's, but you could generally, with all line examples, they tell you areas of the specific stock when it was strong and when it was weak. So even if you don't know just by looking, if I have 0 lines on there, it still shows the chart, even if it doesn't have the Fibonacci right there. But it doesn't show a lot of information. You can't play a specific stock just by looking at it, and just because it's going down, you have to know how to be able to respond as a trader. If things are going down, that's when you start buying puts, but you have to use information too. Everything you see on a chart is information, and it's there for anyone and everyone to see. But the difference between just seeing this information and using it is very different than well, just numbers and lines on a screen, really. You have to understand what these lines mean. So aside from Fibonacci retracement, which shows, you know, we look for golden zones here. We look at this specifically, this 38.2 to 61.8 zone. Yeah, we do look for those, but also notice the other areas. There's many areas of support and resistance here. These 11.4 and 2.3, 78.6 and 88. These are strong rebound zones or support zones, depending on which direction we're headed. So you can watch my Fibonacci video. I'll link that one later on in the vid. But let's go ahead and pay attention to some other indicators here. We're gonna focus on the toolbox that is available to you here on Webull. So let's go over simple moving averages. You can see there are 5 different lines here. You can see right here it says MA, that's short for moving average. You may see it as SMA or just MA. These are moving averages. Simple moving averages are lagging indicators based on the average closing prices based on a number of periods in a range. So, for example, the simple moving average would be an average of the last 8 closing prices in this range here. Let's just say it's somewhat complicated, but really it does all the work for you. That's the nice thing about moving averages. They show you where the stock has been and where it's headed, and you can use that information on the larger time frames. You could see areas again where the stock bounced from these simple moving averages. So if it rides the stronger ones like the 200, which is this purple line here, then you know the stock is headed in a good direction. Well, the larger moving averages will carry the stock where it's supposed to go. But if things are headed down, then you'll see the larger moving averages start to base above where the price action candles are going. And you can see that the further you zoom out, you see how they write it like it's a train track? They're writing it. They're writing these lines all the way up. But now look at 2022. They're starting to write these waves down. These moving averages are getting down below, but you can see this 200 simple moving average is actually acting as support. If we zoom in, you can see it would fall, but it's acting as support. These things change on all the time frames too. Make sure you change your time frames and see. Actually, there's some specific patterns traders who look for on these simple moving averages. On the stronger time frames, there's something called a death cross or a golden cross. Now the death cross means it's when the 200 simple moving average crosses over typically with the 50. So on this one, that's my white line here. If they cross over each other over the price action, it spells doom for the stock in some ways. So if it crosses above right here over the price action, it's gonna fall, and soon enough it did. But in contrast to the death cross, there's something called a golden cross, and that's when the 50 simple moving average crosses with the 200 simple moving average below the movement of the stock, so underneath the candle. So you can see right here, there's one golden cross right here, and it's gonna take the stock up, which it did. I mean, typically, the stock market has just been growing every single year, and so if you see a golden cross, then you should expect more upside movement. But in the areas where it's dropped, there may have been a golden or a death cross somewhere. Typically with the 50, but it's even if the 200 crosses over with like maybe even the 100, still same deal. Still brought down this drop here in 2020. We can go ahead and look further up, and you can see a death cross right there, right here. So very clear as day. Add that with your Fibonacci's, and then you have your more historic areas of support and resistance. We can also look at trends. So typically you want to see, when you look at a chart, even if you remove the Fibonacci's, you want to see the trends. You can see how the stocks have, like, this is just, let's just focus on triple Q. If everything here is moving up, that means the stock market's doing well and the companies within it are also doing well. It's growing. You want to draw a trend line from points that you would draw it from the highest points. You typically, if we're trying to identify a trend, it's in the present day. So if we're gonna draw a trend line, we're gonna want to draw it on the more recent time frames. So let's go ahead and delete this. We'll delete the line so we can clearly see, and we'll go on to the daily. So you can clearly see there's a downtrend. That's indicated by the simple moving averages, but it's also indicated by this sloping downward action. And so now there's two ways you can draw a trend line. You can draw a horizontal or a trend line. You can draw a trend line from the tip top right here and connect the tops of each of these peaks here. And then we'll just draw it somewhere here to like maybe spring 2023. Okay, we'll just get those all to kind of align with each other. And typically I actually make it a solid line instead of a dotted line, and make it a bit thicker to identify. So that's our downtrend on the lower highs. And now I can draw another trend. I'll even color this one red, since we know that's our big resistance. And notice I have it drawn on the daily. I'll show you something in a minute. We'll hide the drawings again, and now we'll collect, or now we'll draw the lower lows. So it kind of starts trending from here all the way down here. Maybe if we stretch it out, there, that looks a little bit better, right? It's not word for word here, but if we keep it within, see, we said from to about 2022 or 2023, right? There. We could even extend it further out. Go to April, all the way to April. Okay. So, assuming the stock market continues to trend downward, if it continues to trend downward, it should respect these trend lines I have drawn out. See, going down. It's staying within this pattern here. Now, if we go onto smaller time frames, you'll see these larger lines, and it's still containing the price action of the candles within it. Cool, right? There's another way you can do this. There's a tool here called the trend channel. And so now if I just drag this line here and all the way down here, boom, it drew its own channel. So you can also color that channel something a little different, maybe, if you want, maybe something light. And so basically, if the price action breaks that trend, then you know there's going to be a difference in the trend. So the opposite of a downtrend would be an uptrend. And the only way we would know that trend is broken is if it starts going up and past it. So basically, back to its old highs that were created at the end of 2021. Let's go look at horizontal lines. So there's when we look at, let's say maybe we can look at the stronger time frames here. You can see areas of where the stock kind of rebounded based on like these like V or W shapes. Some traders actually see these as strong support areas. You could also do the same on the upside. If you see areas where it peaked going downward, like the tip of a triangle, you can view that as resistance. And so now you want to see many areas where it kind of repeated that, and you can use horizontal lines to help draw that out and visualize it. Let's draw a few supply areas and a few demand areas. Similarly to how former supports become resistances and resistances become former supports, same thing applies to supply and demand. When we're drawing horizontal lines here, let's go ahead and just see that if I draw, we kind of see this area here looks pretty strong on the 4 hour. We'll just go ahead and draw a line. Okay, so let's see if it is acting as resistance on the later parts of the time frames. It's that we'll color this one just to identify it. We'll identify it as this light purple. Or how about this yellow line? Yeah, yellow should be okay. I don't think I have any yellow lines here. Okay. So, oh, you can see it right there. So where in this area this line was acting as support for these areas. It's demand right there. Let's go ahead and draw another one where maybe it's acting as, oh, you see this group of lines right here? We can just go ahead and draw another one, horizontal line. It'll be like right here. Okay, we'll keep that one the way it is. You see on this part right here, it's acting as support, but right here it's acting as resistance. And then you see right here before the sudden drop, acting as support. I typically don't use these, but these are actually, if you don't want to draw Fibonacci's and you just want to understand the horizontal lines, that's how you can use these. Or another tool I like to use is the rectangular box here. And then so now if you want to focus on a specific trade area, you can use this however you want. If there's a trade, or if there's a specific area that you're focused on, like say you want the stock to get within a specific range. Like I trade credit spreads. I want the stock to get to a specific range. Then you can use this area. I'll show you on a ticker where I actually have the box active. So you can see here on my Costco ticker here, on my Costco chart here, I actually want the stock to get into this slightly dark green area because I have a put credit spread, which is a bullish credit spread. So I want it to go up in price, basically is what I'm trying to say. By next Friday, buy before next Friday. So as long as Costco gets to there, that option will become profitable. And so, and I also truly believe that it does because it's still within a trading range based on my trend lines drawn out. And it has been shown to just stay within this area and maybe even bounce back down once it hits the top of this trend line. So I'm using that as my guide. If you can use the charts to help aid your trade, that'll be a lot better than if you have zero lines at all. You can't, I mean, this does tell you some information, but when you have your own drawn lines out, then you can create your own plan instead of just going off of feel and what everyone else is doing. If you can create these lines yourself, then you yourself will become a better trader and you might have more profitable trades and a more profitable portfolio in the end. But those are just a few examples of how to use lines to help your trades. There are even more advanced versions of it called like Harmonics training, or called Harmonics, where you actually create certain shapes based on how the price action has been moving over a long period of time. I actually don't do Harmonics, but a few people in my trading group do, and they're really good at it. And they've been able to predict some really big moves in the market, not just based off of news. We use the news as catalysts, but they know deep down that the way the algorithms and computers are trying to direct the stock are all based on harmonics. So that's how they use it. But with the lines that I've shown you, the Fibonacci, trend line, the rectangular tool, the simple moving averages, those are all lines that you can use at your disposal to help you with your trades. I actually really wasn't using lines back in the day because I was really bad at technical analysis, but I think I'm a lot better at it now, and I can enter a trade with a lot more information on the screen because I have my lines drawn out, and if something happens to the stock, at least I know where it might fall, and if it does fall, then I can play that action. I can play actions around it. If it's falling, then I'm more of a bull still, even though we're in a bear market. But when things pop and pump, like as in the stock really shoots up, I try to benefit off of that. I try to capitalize off of that using the information I have on my screen. So hopefully you guys can do the same. But yeah, with whatever ticker you're playing, always just draw your lines out, draw your Fibonacci's. If you identify any trends, use the trend channel, use the trend line, and then play the stock a bit. Then you'll understand how the stock wants to move and how to play it. Because not all options work on every stock, because you might see some stocks are really expensive, some are really cheap, so maybe you can just gather shares instead of playing options on it. That comes with a little bit of experimentation, but if you do your homework on drawing lines on stocks, you yourself will become a better trader overall, and your trades will become a lot more profitable, and you might know areas where it's good to jump off or when to get right in. Use that information to your advantage. So that's it for me. Let me know what you guys think. What indicators do you like for drawing lines on your chart? The lines are just there to direct you. They tell you a lot of information, and they prepare you for what's going to happen. And of course, you still have to play the stock based on what's actually happening to the stock as a company or even in the news. But if you have your lines drawn out, you can be a lot more objective as to how you want the stock to move out and how to play out. So just keep at it. Keep on making sure that it becomes a regular habit and that you're not just jumping into a play because everyone else is. You'll have that informational edge, and it'll help you improve your trades in the long run. So just keep at it. Keep using your tools at your disposal. Anyways, I'm out of here. Hope you had a good time. But before you get out of here, in order to earn it, got to learn it. And in order to get what we desire, gotta jump in the fire. Catch you later.